NBC 10 at Issue starts now.
More bang for your buck. That's the thinking behind a new type of long-term care insurance that's gaining popularity. It's called hybrid life insurance. It could be just the ticket for folks concerned about the soaring cost of traditional long-term care plan. Joining me now is Professor Jamie Hopkins. Jamie is an associate professor of taxation for the American College of Financial Services. He's also director of the New York Life Center for Retirement Income. Thanks for being with us, Jamie.
Yeah, thanks for having me on again.
All right, so long-term care insurance, something a lot of people, actually you guys did a survey, something a lot of people don't really think about, plan about, and don't want to talk about.
Yeah, it's a little unfortunate. It's actually what I say is one of the biggest retirement risks out there.
Sure.
Is not having a plan in place. And only about 7 to 8% of the population ever gets a long-term care insurance policy. So the vast majority of people don't set up a plan for that. And we've done literacy surveys on this where only about 30% of people really show any type of literacy around long-term care planning. So, it's a big risk. Not a lot of people are doing anything about it. And they don't know a whole lot about it. So it's kind of that's not a good combination to start with.
But that's why you're here with us today, Jamie. All right, in the time that we have, we're going to inform our viewers. All right, so a lot of people think they can rely on Medicare or Medicaid when they hit 65, but you say not so.
Yeah, so Medicare is not designed to cover long-term care expenses. So most people think, oh, I have Medicare, I'll be okay. Once you're in that nursing home, really quickly, it's going to not be paying for housing or anything like that. So you're going to be off. To qualify for Medicaid, you really have to spend down all your assets. So you're out of money, then Medicaid clicks in. So those are not really the funding sources for a lot of people want to rely on. So then are we going to self-fund it? Are we going to buy insurance? Or, as we'll talk about, use a hybrid approach?
And before we get to the hybrid approach, in terms of the long-term care insurance, just by itself, some people don't like it because it's like a use it or lose it type of policy. Explain that for us.
Yeah, so use it or lose it. A lot of people say, I don't like that. I know I hand over money and premiums. And then if I don't need long-term care insurance, I don't get anything. But what I always say to that is, I buy car insurance. You probably have car insurance.
Sure.
We hope not to use car insurance, right? I don't want to get in an accident, so I say, yay, I got to use my insurance. So long-term care is a little bit like that. We kind of hope not to use it, but we're very happy when we have it there. So it's a similar thing, and we'll talk about, there are some things you can do about that. There are return of premium policies that'll actually give back what you pay. What that means is your growth in the insurance amount is going to be less. You're going to give up something to get that guarantee back.
And then, of course, as we mentioned, there are these hybrid long-term care life insurance type policies. Explain that for us.
Yeah, and you said that in a great way. There's life and long-term care, and you're like, or is it long-term care? That's how people feel about them. They're not well understood yet because they're fairly new. The growth in this is just starting to occur. And what they are is, there's actually two different types, so I should kind of preface that. There's really a life insurance policy that has accelerated death benefits. So what you think you're buying that death benefit for, there can be triggers in there that can allow you to get that money before you pass away. And that's not like selling it on a secondary market. It's actually just in your policy. So it's always one thing to check. Your life insurance policy you already have might be able to do double duty there. Now, the other version of it is really life insurance with a true long-term care benefit attached to that.
The hybrid.
Right, and we call that a rider. So you are really paying something for that in your premium, but what you're getting is that ability to really get long-term care coverage if you need it. If you don't need it, you still get your death benefit from the policy. And then that goes back to the idea, right, that use it or lose it. I'm not going to lose it. I'm either going to get long-term care coverage while I'm alive or a death benefit at death. So that does require, right, some need for life insurance still in retirement. So if you don't have that need, maybe a traditional long-term care insurance policy is better. But otherwise, you could look at that one that's kind of doing double duty for your money, because some people find that easier to understand, too, that you still get something.
Pros and cons with both of them.
Yeah, pros and cons for both of them. Long-term care insurance is designed to cover long-term care costs. So as I say, that's the most efficient way to fund long-term care. However, if you have an existing life insurance policy, you can actually exchange that for one with a long-term care rider on it. So a lot of people don't know that. You've had a life insurance policy, which is a tremendous part of the population. You start getting near to retirement, you might not need the death benefit as much because, right, you've made it through your working years, and that's probably why you bought it. Now you could go to a place and actually exchange it for a life insurance policy with that long-term care rider on it. So you might actually already have the funding mechanism for your long-term care expenses. You still have to do some planning and exchange it. But that's a really kind of beneficial option that a lot of people just don't think about.
You learn something new every day, myself included. All right, we've got about a minute left, and I want to give a little preview for our viewers of when we see you again. You're going to be back on At Issue in just about 3 weeks, 3 weeks from now, and we are talking about end-of-year planning.
Yeah, so if I can get a plug in here for end-of-year planning, it's start today, right? Don't even wait for me. So, look up somebody who does comprehensive planning. That's what you're going to need. Carson Wealth or any advisor out there that you see, look for that. But we're going to talk about some of those really new tax things that just changed this year. So definitely watch, and we'll try to give you some tips before the end of the year.
Because of the new tax code that's in place.
Yep, Tax Cut and Job Act changed everything, and nobody's filed taxes under it before. So you really do need kind of some advice and help here heading into the new year.
All right, and we're going to be looking to you for that. Jamie Hopkins with the American College, thank you so much for being with us. Really appreciate all of your advice and expertise.
Thank you so much.